President Trump's administration stunned the world with a bold ultimatum. Global banks must stop facilitating trade with China or lose access to the US dollar and American financial markets. This was no ordinary trade measure. It threatened the very foundation of international commerce. The US dollar, long the bedrock of global trade, was now a weapon. Banks worldwide faced an impossible choice: cut ties with China or risk financial ruin. The move forced institutions to pick sides in the escalating US-China rivalry, with massive geopolitical consequences. The policy marked a dramatic escalation of the America First doctrine, shifting from tariffs to the heart of global finance. The administration gambled that squeezing China's financial lifelines would force change, but risked backlash and disruption at home and abroad. The financial world responded with shock, scrambling to assess the directive's impact. Uncertainty alone chilled new trade deals and investment, as everyone waited to see if this was a negotiating tactic or a new red line. The world watched, bracing for a realignment of economic power, or a financial crisis that could reshape the global landscape. At the heart of Trump's new trade order is a sweeping tariff, a 15% baseline on nearly all US imports. Gone are nuanced negotiations. In their place, a blunt protectionist policy. Over 200 countries now face tariffs, some as high as 50%, with access to the US market treated as a privilege to be earned. Allies can negotiate for the 15% rate by making concessions, while rivals face steeper penalties. This marks a sharp break from decades of multilateral, rules-based trade. The US quickly notified nations of their new terms, ending the era of one-sided deals. The administration claims tariffs are revitalizing American industry, pointing to rising tariff revenues and falling import prices. Critics warn of shrinking global trade and deepening uncertainty, as the World Trade Organization sounds the alarm. The world is adjusting to a new, unpredictable hierarchy in global commerce. China's response to the US ultimatum has been a mix of public defiance and quiet negotiation. Beijing denounced the policy as economic bullying, vowing to defend its interests and rallying domestic support for a long confrontation. Yet, behind closed doors, China entered talks, securing a 90-day tariff truce to buy time and seek leverage. China is accelerating efforts to reduce reliance on the US dollar and American technology, investing heavily in domestic industries and promoting the yuan abroad. Ironically, US pressure may be speeding the rise of a rival economic bloc centered on Beijing. China's dual-track strategy, negotiating while building resilience, prepares for either tense coexistence or open conflict. The stakes are enormous. US policies threaten China's growth and social stability, but capitulation is politically impossible. Beijing walks a tightrope, seeking to de-escalate while preparing for a world less dependent on the US. The response is not surrender, but strategic patience and resistance. China is determined to avoid humiliation, even as it adapts to a new global reality. The world watches as China balances negotiation with preparation for a more divided future. The European Union, under threat of crippling tariffs, rushed into high-stakes negotiations with the US. The resulting deal set a 15% tariff on most EU exports to America, costly, but better than the alternative. In return, Europe agreed to buy $750 billion in US energy and invest $600 billion in American industry. President Trump called it a major victory. For Europe, it was a pragmatic move to avoid a trade war. The agreement isn't a free trade pact. It's a patchwork of exceptions and quotas, leaving key industries exposed. Iconic sectors like wine and steel now face strict limits and steep penalties for exceeding quotas. The deal signals a shift to managed trade, with European growth forecasts slashed as a result. Europe chose stability over confrontation, accepting a costly new order. The old era of free-flowing transatlantic trade is over, replaced by a complex, American-led framework. For now, Europe must navigate this new landscape, prioritizing predictability over idealism. America's trade ultimatum has forced allies worldwide to rethink their economic strategies. Japan secured the 15% tariff rate by pledging $550 billion in US investment, supporting projects like TSMC's Arizona chip plants. Canada, however, faces tough negotiations and threats of 35% tariffs, showing that even close allies get no special treatment. The policy has upended old alliances, creating uncertainty for industries deeply tied to the US market. Meanwhile, the US is leveraging its market to pry open foreign economies, as seen in new beef exports to Australia. Each deal reinforces a hub-and-spoke model, with the US dictating terms to all partners. The world is now a patchwork of bilateral deals, not a rules-based system. Nations must negotiate directly with Washington, navigating a chaotic, unpredictable environment. As Singapore's foreign minister put it, we're in a dangerous transition between world orders. The era of global free trade is over. Adaptation is now the key to survival. Countries must secure their future in an age of American protectionism. The new tariff regime has split the business world into winners and losers. Some U.S. companies, like Boston Beer, plan to pass higher costs to consumers, relying on brand loyalty to weather the storm. Foreign firms and those with global supply chains like Kia and LG are hit hard, reporting massive losses and considering job cuts. The fashion industry, especially brands like Puma, faces plummeting profits and tough choices: absorb costs, raise prices, or relocate production. The administration's goal is clear: make it too expensive to import, forcing companies to invest in U.S. manufacturing. Major investment pledges from the EU, Japan, and TSMC suggest the strategy is working for some. But for every new U.S. factory, many companies struggle with disruption, higher costs, and deep uncertainty. The new trade order is a battlefield, with survival favoring those who can adapt quickly. Trump's trade policy is redrawing the map of global investment. High tariffs are driving foreign capital into the U.S., as companies build factories inside the tariff wall. Massive pledges from the EU and Japan will finance American jobs and infrastructure for years. The semiconductor sector is a prime example. TSMC's $100 billion investment in Arizona secures U.S. chip supply and creates a new tech hub. But this inward flow comes at a global cost. Capital that once fueled growth in Asia or Europe now stays in America. The result, a zero-sum game, with America's gain another nation's loss. The WTO warns of shrinking global trade as investment decisions are driven by politics, not efficiency. Companies are rethinking supply chains, prioritizing reliability and proximity over cost. Nearshoring and friendshoring are replacing just-in-time global models. This shift will define the next generation of global manufacturing and the new economic order. This new era of trade isn't just a geopolitical chess match, it affects your daily life. Prices are rising as companies pass on tariff costs, ending decades of cheap imports. Some sectors, like advanced manufacturing, are seeing new jobs and investment, but others, especially those tied to global supply chains, face layoffs and uncertainty. The global economy is less stable, with financial markets more volatile as US-China tensions escalate. Economic trouble abroad can quickly ripple home, impacting your investments and job security. The US is moving from global integration to national competition, promising stronger industry but higher prices and strained alliances. The benefits: more domestic production, national security, and a revitalized industrial base. The costs: higher consumer prices, fractured global relationships, and a riskier world. Understanding these trade-offs is crucial, as the outcome will shape not just policy, but your everyday reality. The New World Order is being written at the highest levels, but its impact will be felt at your kitchen table.